Although there are rumblings that the global economy may be on the brink of starting to struggle, led by China, U.S. trade war, U.S. government shutdown, slow Chinese economic growth and Brexit among other themes, SoftBank Tayo 9984 continues looking for new tech companies to invest in at pace, with Chinese used car trading website Guazi.com currently the target of its affections. The slowing Chinese economy has been reported by several companies as being the cause of slashed earnings targets, with both Apple, covered here Nasdaq, AAPL, and Nvidia, covered here Nasdaq, NVDA, feeling the brunt of the Chinese slowdown this quarter. But there do seem to be a few drivers behind SoftBank's continued interest in Chinese technology companies. Related, Tencent shares rise after new game approvals, hoping for PlayerUnknown's Battlegrounds soon. First up, a slowdown in Chinese growth now has the country's GDP growing at an annualized 6.5%, still significantly faster than most Western nations. Granted, these are official figures which are doubtless massaged somewhat, but the overall trend is still significantly positive, albeit shrinking. China was up around 10% per year until 2012 and since then has been on a trajectory from 8% down to the current 6.5%. The Chinese almost 1.4 billion population still has significant growth left to give, with GDP per capita at a little under $9,000 per year. Secondly, there are admittedly mixed messages of positivity emanating from both Beijing and Washington, D.C. with regards to ongoing negotiations to end the trade dispute before the more punitive 25% tariffs by the U.S. kick in on the 1st of March, which would inevitably lead to more damage to prospects for renewed economic growth should they come about. Related, Uber allegedly files for IPO in step with Lyft. Third, much of China is still without automotive transportation. 2018 estimates put the number of cars in the country at approximately 240 million. Given that about 65% of the population is between 16 and 60, that means that a staggering 650 million people of driving age don't have a car, rough number given that driving age is 18. Whatever way you cut it, that's one hell of a second-hand market that cars will be filtering down through in the coming decades. Couple that with the declining new car sales numbers of the world's #1 car market, and it makes for tantalizing reading for SoftBank. Chinese used car sales are continuing to increase, with an 11.5% jump in 2018 from 2017. Additional Chinese governmental incentives to both loosen regulatory restrictions on selling used cars as well as targeted subsidies to boost rural sales will also help. Guazi.com, SoftBank sets the scene. According to the usual people familiar with the matter, SoftBank has also been in talks with a Guazi competitor, Renrench, which is funded in part by Chinese Uber equivalent Didi Chuxing. Given that SoftBank owns a stake in Didi, it must have seen something it didn't like in Renrench for it to turn its back on the firm and pursue Guazi. It's also interesting to note that SoftBank's Chinese competitor, in some ways Tencent HKG 0700, currently has a stake in both Guazi and Renrench. The talk suggests that the $1.5 billion boost to Guazi would value the firm at approximately $8.5 billion, a significant boost on the $6.6 billion it was valued at during its fundraise just a few short months ago in November. SoftBank still has its ambitions, of course, and a sizable coffer with which to pursue long-term investments. Warren Buffett's preferred holding period of forever is a useful perspective to look at, though, when dealing with the kinds of investments that SoftBank is making, so short-term market hits due to economic cycle and other events are less likely to worry them. With new car sales in China falling, the used car market will mature, and given the commission charged by Guazi to sellers, SoftBank appears to think that's where there is a lot of money to be made as a hedge against its investments in automakers.